Welcome to the C-Suite Series presented by Channelchek and Noble Capital Markets. Noble is an SEC-registered FINRA-licensed broker-dealer and the source of the equity research available on Channelchek. Of the 6,000 small and microcap companies listed on the site, today we're featuring Pangaea Logistics. Poe Fratt, Noble's senior research analyst covering the company, will be interviewing CEO Ed Coll and Managing Director Mads Petersen. Afterwards, he'll be joined by Michael Kopinski, Noble's Director of Research, to discuss the key takeaways. As a reminder, Poe's research is available at no cost on Channelchek. Just type in Pangaea Logistics in the top left Company Data section. And now, here's Poe, Ed, and Mads.
With us today, we have Pangaea's management team, Pangaea Logistics management team, Ed Coll, who's the co-founder of Pangaea Logistics, and Mads Petersen, who is the managing director who resides over in Europe. Ed, why don't we start with you and just talk about a couple macro issues. What's the current state of the dry bulk market?
Well, I think it's been pretty resilient, right? The market has been resilient, so it's a cyclical business, right? So we always have concerns going forward about how it's going to work, but it's been hanging in there mostly based on China. China's been pretty proactive with things, and the commodity prices are pretty high relatively, so and I like to think that we will continue to see improvements in the market, especially with this supply-demand situation going into next year.
Okay. How sustainable do you think the rebound is that started in June?
I think that you're going to end up to see a big push. I think you'll see a big push in the short to medium term, and then it will settle down. I would say largely because there's a lot of pent-up demand that will come out, and we feel that. And but the reality is, as you get into the first quarter, at least of next year, it's a bit suspect about how long that will last.
Okay, you talked about a little bit about seasonality, and investors often comment about the volatility and unpredictability of the market. Is there anything that you think the market can do from a structural standpoint to temper volatility and become, a little more predictable?
Not really. I mean, this is a very dynamic market, and so many things are come into play, with it, right? So whether it's supply and demand of commodities, problems here and there with trade disruptions, problems with trade wars, et cetera. It's pretty hard to predict. So what you end up doing is you have to try to, protect your downside and look for the opportunities going forward.
Do you have a view on consolidation?
I'm not sure how that actually works. I mean, we've been presented with those opportunities, but our business platform is completely different, in a way that we manage our fleet, compared to the opportunities to employ the fleet, right? So, and we've had this a number of times. People come and say, "Oh, do you want 100 ships?" And we say, "No, we don't want 100 ships. It's not our business to run 100 ships. It's our business to to run our business. I mean, it's not a volume business.
Okay. When we look at the overall market, it looks like, dry bulk supply, the outlook is pretty muted, but you are building 4 post-Panamax ice classes. Why do you think, what drove that decision? And then why do you think others aren't building as much as historically they have?
Well, it's probably a better question for Matt's, but I'll tell you from my point of view that we're building those ships against requirements from our contractual parties. Otherwise, we would not do it. End of story. We would not. And so we're believers. We're with Matt's leadership, we're leaders in that space, in the ice class space, and that's where we're going with it. Have employment, and without that piece of it, otherwise it would be total speculation. In terms of the general market, people, the uncertainty out there is difficult, so and people are not building, so that's good for the general market.
Okay. When you look at the low order book right now, how long do you think that'll remain in place? And then do you think that there will be much scrapping going forward?
Well, on the order book, the challenge is how stressed the yards become, I think, because if they feel like they need to do things, they will do things, and even at a loss, because it becomes geopolitical, and if you're building ships in certain places, then they need to have the employment for the people. That's number one. But on the rest of it with the scrapping, I think people will look at that opportunistically, and they're going to say, what is our situation? And if you have to face up to facing a big dry dock bill, maybe you scrap. I think that's probably the calculation, and we've gone through that before ourselves.
Okay, and then when you look at sort of the regulations that have come out recently, IMO 2020 that was on the radar screen for a while. Are there any future regulations on the radar screen? For instance, like fuel mandates, or any propulsion technology that's out there that you're considering?
I think we have to be flexible. When we have to, and this is our life, right? So we have to look at things and react accordingly. And I think one of the good things about this company is that we do constantly, pay attention, and so we do look at all the things that are going on in the world, and how that's going to affect our business. The scrubber thing, for example, we avoided, and I think that was the right decision. But you're always looking at the things that are going to affect your business.
And I think if I just can add something there, so, we did go through, what was a pretty, extensive research phase before we went ahead with the new buildings, and in our view, the really good solution is simply not there. It's not a scrubber. We don't feel like LNG is really gonna make a really positive change, and it doesn't really fit our business very well. But of course, so we spend a lot of energy on how to optimize how we run our fleet. And of course, as Ed says, it's part of the DNA in this company always to look for what's new and to be curious, and we continue to do that. But simply the obvious answer in terms of what technology to use is simply not there now. And I think that is probably the only thing people agree on when it comes to this point in the business.
Okay, that's a good segue into talking about Pangaea Logistics in particular. And, one thing's for sure is your fleet never stays the same. Can you talk about the fleet renewal program? And then, what's been the catalyst for that program? And, what drove that decision?
Well, we've looked at, I think we've disposed of 5 ships within the past 8 or 10 months. And, the driving force for that was to have, excluding the ice ships, right, which are very modern. We've decided we have to do a fleet renewal. We don't want to face up to dry docks for older ships. And I think that that made the decision pretty simple. And, at this particular point, we're trolling around to pick up a couple of more ships at least in this environment. But it's all about renewing the fleet. I think by the time the new buildings deliver and we're through this process, I think the average age of the fleet will go from like 13 years down to 8 years, if not less, and that's a natural thing to do. The older ships, it always costs more money to operate. They always need more, TLC to take care of them. And, if we naturally will do that. That's a natural progression.
Okay, so the current status of it, Ed, it sounds like that you've, sold a lot of assets, you have the new builds coming on, and that it's more expansionary right now as opposed to, your existing fleet contracting?
Well, for sure. I mean, we're taking the new buildings on. We're looking in the market to pick up some much more modern ships to replace what we've disposed of. We need the ships to run our business. I mean, that's part of the model, right? We need to have ships on the water that we own and control, because we do a lot of different things that you cannot do with chartered ships, and so it's just a natural progression.
Okay, if we could talk about your contracting strategy, or your cargo, I call it cargo centric focus. You have your own fleet, and then you augment that with a lot of chartered in capacity. Can you just describe how you think that adds value? I mean, when you look at how consistently you outperform the indices from a TCE standpoint, can you give us a couple examples of how that strategy actually adds the value and generates outperformance?
Well, I think first that you need to have a fleet on the water to find the opportunities. Okay, there's a part of that that you have to deal with, right? So if you have if you didn't have any owned ships, no one, no real charter is going to take you seriously. So that's one part. The other part is, once you do that, and we do some odd things with our ships, and people know that we are pretty proactive with that. So we do need to have that fleet on the water. When it comes to the chartered ships, it's more, I wouldn't say opportunistic, but it's the business that we are in that gives us access to these cargoes. And sometimes our ships are in position, sometimes they're not. So we have to be constantly aware of the markets, which we are. That's our job. That's what we do. So, but we can get rid of if we see a market changing. We can pair our fleet, and that's fine. But we have a base fleet. A lot of it is the ice class, and a lot of it is already programmed. That's kind of where we end up being, but we're opportunistic on the chartered ships. That's where we are.
And I think, so I think if I just can add here that the consistency in the performance and the earnings is very basically this, because we have a consistency in the strategy and the way we approach the business, right? We have a large part of our fleet is owned, unlike most others out there, and that as Ed says, it actually starts with the cargo that goes into the ships, and how do we develop those long-term relationships with customers, and that is deliberately seeking out niches and seeking out things that are hard to do, that doesn't fit in the spreadsheets and the algorithms of the big companies. And what tends to happen actually in many cases that if we start out providing maybe a relatively simple or basic service for a customer, but then we get to know them, we would like to think a different dialogue and a different relationship with our customers that allows us to do more things with them. So that is such a stevedoring complementary business. We do a lot of business with our ice class customers that have nothing to do with ice, right? So we have to do it, and the idea is that the chartered fleet arguments the own fleet, not the other way around, right? We have a nimble approach in our chartering book, and you can handle that pretty easily. That will, the two things work together really. And it's about customers. At the end of the day, it's about the customer and what can we do for them, and how can we actually provide a service to them. And I think that's one of the main areas where we're different.
Okay, and then if we could talk about a little bit more about the fleet, because that seems to be a differentiating point too. And you recently acquired a third interest in the joint venture that owns the 6 ice class fleets. Can you, Mads, maybe talk about how the ice class fleet fits into the overall fleet, and how often they're used at their full capability, and then how you integrate the ice class fleet into the rest of the fleet, during times, the non-ice season, if you will.
Sure. And I think, overriding the idea behind or the strategy behind the ice class ships is actually not that different from much of the other business that we do. It's about finding a niche and be a dominant player in that area, whether that's logistics or stevedoring, for instance, or project stuff. But the ice class ships are essentially engaged in ice class trading, I would say 8 months of the year. There's a variation of ice involved, and that is, of course, in the winter season. We use the ships in Canada, the US East Coast, and in the Baltic Sea. And then in the summer times, we use the ships in the Arctic, serving one of our major customers up there, and as well as doing trips around the Northern Sea route. Now, one of the challenges of operating ice class tonnages is exactly what you asked. What do you do outside the ice season? And the good thing about our fleet is that we deliberately chose ships that are ice class strengthened. They're specialized, but they are not specialized to a degree where they cannot operate in a conventional trade. So we use the ships primarily to serve the same customers we do during the winter time. We have a group of customers that do business year round, and we will continue to serve them, and also try to do a service for them outside the ice, right? So the ships are unique and special, yes, but not to an extent where they can't be used in conventional trading, and that's a huge part of the value proposition. Also, of course, in making sure that you don't order too expensive ships, too specialized ships that only one thing. That's not what we're here to do.
Okay, yeah, and if you could talk about how large the market is, the ice class market, and then maybe, does the ice class fleet create the durable competitive strategy that we think you have?
I mean, we certainly think so, and that's also, of course, why we are expanding the fleet. It's the part of our business where we can't charter in tonnage. The ships like this simply don't exist outside our fleet, so we have to do it. Now, of course, we have big expectations in terms of the Arctic and the possibilities there, both in terms of projects that are in operation today, but also that will be coming down the line in the next 5-10 years, right? When you are building ships from new building stage, right? You need to think about the long game, and that is certainly what we're trying to do by building ships that we think will provide a very good return for us over the duration. Like, our approach to these ships is that, unlike other owners who buy and sell ships all the time, these ice class ships will most likely be ours from cradle to grave.
Great. And Ed, can you talk about the current contracting strategy? You talked about a little bit of uncertainty going into the seasonality of early next year. Are you keeping the chartered in books shorter because of that, or can you just talk about what you're doing right now?
Well, I think that naturally the way our program works is, as we come out of the summer season in the Arctic, we also charter in that business, right? So those ships will be unwound, and we will be much more careful about how we charter going into the first quarter. So I expect that the fleet will get a little bit lower. But what we are actually doing is we're spending in an inordinate amount of time on the logistics space, and it's stages, but it's all good performing long-term business that will lead to opportunities for us, so I think that's the biggest thing going forward. And if we are investing in terminals and developing business in that space, it leads to employment for the ships, whether it's our ships or chartered ships. But that's kind of where it goes, and that's solid business, really, for us. I mean, we're not running 500 ships, and nor would we want to, but we are down in the weeds, and we're making things happen, and doing good partnerships with people on the ground.
Okay, it seems like one of the current challenges is changing crews, and how are you handling that challenge, and do you think it's becoming less onerous to change crews at this point in time?
Well, all I can say about that is I think because it's a whole subject. I mean, we've been very lucky here, and I think also in Denmark, but that no one has gotten sick. Knock on wood, and thank goodness. The guys on the ships, we have not had trouble doing what we need to do. And I take my hat off to our guys in Greece. We do our own technical management there, and they've done a great job of being able to manage this situation. So, fortunately for us, we've not had to particularly face up to any troubles. Is that because we're smart, or is that because we're lucky? I'm not sure, but they have size and grease have been pretty good.
Okay. And, one thing, if we could talk about what isn't part of your strategy, you talked about scrubbers before, that you decided not to install any scrubbers on your own fleet. Why aren't, it doesn't look like you have much in the way of exposure to the Cape market. Can you just talk about why Capes aren't part of your strategy?
I think for us, it's pretty straightforward because we do things where we can add value. You can't add value in the Cape market. You simply can't. So people are speculating, right? So that's not our game, right? So if we can always make something out of something, but you can't make it in the Cape market. Market's up, market's down. You have to take it. You get who you're going to deal with. You have counterparty risk. It's totally an asset-based thing, and that's not our business.
Okay, and you mentioned logistics services and like stevedoring and also supporting the wind industry. Can you talk about some of those projects, and when you think about that segment, Ed, how large do you think it can be, and or do you have a cash flow target for that segment or these other services?
I'd probably stay away from the cash flow part, but I can tell you it contributes to the bottom line significantly, especially as we go forward. But I think it's a much more stable business than buying capes. Let's put it that way. Because you have business, you're running a terminal, you're doing this, you're doing that, you're gonna make some money. And for us, our view is simply that by doing that, you're going to lead yourself to more business for ships. Okay. And, this has always been the holy grail, as long as I've been in the business, it's soup to nuts, right? So origin to destination, you can, and we've done this, right? We've gone out, we've bought cargoes, and we've moved them on our own ships, and then we've sold them. We've done this type of thing, and we're not afraid of it as long as we understand what the risk is. And I think that's kind of where we need to be. It's not the backbone of the business. I mean, but if we continue to do that sort of thing, it puts a layer under the entire company where you're making a good return on your money, and underlying your entire business and leading to other things. So I think it's probably one of the best things we've ever done, is to go into this stage.
Sort of creates that extra cushion every quarter that is going to be there regardless of what the overall market does. Can you maybe talk about what your biggest surprise this year has been, Ed, and maybe your biggest disappointment?
It's probably the same, right? The biggest surprise is that this COVID thing has lasted the way it has, right? And it's the same as the disappointment. Our existing business is, it's quite fine, and you maintain your relationships. I mean, the challenge is that no one can travel, okay? And so that becomes a big issue. And I suppose that's really the thing. I mean, it slows down the ability to create things, and that's kind of where everyone is, right? It's not if you have a bunch of people that are gung ho and they're going to say, oh, I'll travel to Timbuktu, but if no one in Timbuktu wants to see them, you're not going to get very, very far. So that's probably the biggest challenge and disappointment, but that will also pass. It'll pass. Really. I mean, so I suppose those are the two things: the surprise. When you thought, okay, this is going to be a temporary thing, which it's not, and that at the same point, it's a disappointment because you can't go out and do all the things you want to do. But we're doing well, comparatively. So we really are, and we are developing things. It's just slower.
And I think generally when you go through a crisis like this, Poe, right? I think it actually gives us an opportunity to be a little bit ahead of the curve. I feel in terms of what we see other people are doing, because there's still a lot of putting out fires in other companies, right? Our guys are here and they're working, and they're trying to do things. I think we have done a good job of sort of adjusting our mentality to understand that the next 6, 12 months, whatever, even longer, will be very different. And we did not lose a beat when everyone suddenly had to work from home, and the guys in the offices and on the ships and everything. It's the way we responded to this, and our sort of agility in terms of adjusting, I think has been that has for sure for me been a very positive surprise.
I want to thank Ed and Mads today for sharing the spotlight of Pangaea's logistics unique strategy. They've been able to manage through many different cycles and thrive, and I really appreciate your time today. Thank you so much, Ed. Thank you so much, Mads.
Thank you, Poe.
Thank you, Poe, very much.
Poe, I'm fascinated to have learned about this industry. I am a little confused about these ice vessels, and I was wondering if you can just talk a little bit about their strategy with the ice vessel market, and maybe give us a sense of why this market is important.
Well, I think one, they've been involved. It's important to them because they own ice class vessels. They've owned and operated ice class vessels for a long time. They're a large part of the overall market. It's a specialized market that doesn't have as much competition, so it's more of an oligopoly. So you don't have, the intense competition that you see across the broader dry bulk market. And at the same time, they're very close to their customers, and they've had long-standing relationships with their customers. And so that's allowed them to, essentially get contracts in advance of building new vessels for the ice class market. And that's, I think a big competitive advantage for Pangaea Logistics.
And then, Poe, can you talk a little bit about the durability of their strategy?
Yeah, I think the durability of the strategy is pretty good. It's been proven over time. They've consistently outperformed the indices. And when you look at the TCE rates that they generate quarter in, quarter out. And I think part of that is that they tend to augment their cargo book and have a very large cargo book that is over and above what their existing fleet is. So they can flex their fleet and charter in capacity when they need to. And so there isn't a huge a fixed cost asset base that you have, and that allows you to manage through the cycles a lot more proactively than other companies that have huge fixed cost bases.
Well, Poe, I learned a lot about this industry, and I greatly appreciate you bringing the management to us. Thank you.
Thank you, Mike.
This has been the C-Suite Interview Series, brought to you by Channelchek and Noble Capital Markets. Log in to Channelchek or subscribe to our YouTube channel to get the full catalog of C-Suite interviews and virtual roadshow channelcasts. Register for Channelchek's no-cost premium content and receive notifications of new releases from both series. Thank you for joining us.